topic a lot of people ask us about. I'll talk about this. This is called the truth about becoming your own bank. What do you need to know? Both if you are somebody who's thinking about buying into this concept, or you are like a financial person and you're like offering this to people, what should you know? What should you be aware of? And then I'm going to also show you some receipts around this subject. So stay tuned for that. So number one, what this is a concept. Becoming your own bank. For those of you who are new to that phrase or that concept, is essentially a structure in which somebody is storing money inside of life insurance policies, properly structured life insurance policies, and leveraging it to do other things with it. Everything from buying other assets to lending, becoming hard money lenders, to being collateral lending, all these different things you can leverage your policy for that. People use it to buy cars, expand their businesses, etc. So, what makes me, first of all, I want to talk about some of the things you need to know before you do these strategies. What are some of the things you need to know, you need to be aware of, you need to be thinking about? You just need, what are some of the things you need to be knowledgeable on? And then some of the ways we do things. So first of all, what makes me qualified to talk about this particular subject? What makes me qualified to talk about this strategy? So I'll actually show you a few things. So we have a financial business. My wife and I run a financial business. We've got a team. We have people here in our office, and we've got a team in different places. And we help clients. Actually, this is one of the things we help clients with. We do a lot of different things with business capital. We have a lending division for our company. We have a family office program where we help people with their overall financial picture and investing in private real estate deals, all these different things, right? So, but what specifically makes me somebody's qualified to talk about this? Because a lot of times on social media, you have a lot of opinions. So anybody can go online and have an opinion. What you want to look at is what has somebody actually done, or what have they produced. So I'm going to show you a couple of these. I'll pull it up close so you can see. I don't know if you can see the numbers on here. But so we've actually utilized these policies both for ourselves and for our clients. So this one here, this is a client putting in $60,000 a year. If you can see numbers on there on the top, if you look at the top here, $60,000 a year. This is where it's showing. I don't know if you can see it, $60,000 a year. That's what the client's putting in annually into that structure. This other client's putting in $100,000 a year. This is where you look down here, 85,000 and 14,000. I don't know how blurry it is. There, you guys can see it. 85,000, $100,000 a year, $100,000 a year is what the client's putting into this policy. Let me show it to you guys better. $100,000 a year. I don't know if it's backwards to you guys, but there it is. I think you can see it. If you can see it, let me know. So $100,000 a year. This client's putting in $50,000 a year. So why am I showing you all this? These are receipts. This is credibility. This is a little fuzzy on this part, but there you can look at that. There you see that, $100,000 a year. I mean, this one's 50. I'm sorry. This one's $50,000 a year. The client's putting into the strategy. So we got a bunch of these. This is just, I printed out like half a dozen clients. Some of them putting in money per month, putting money monthly. Some of them are putting $5,000 a month, $8,000 a month, stuff like that. So why do I show you that? I show you that because, dude, it's credibility. I'm proud that we help our clients put these. But the other thing is that all of these, you see it says pre-authorized. Why does somebody pre-authorize you to draft $80,000 from a bank account once a year or $5,000 a month in a bank account? These are not stupid people. Okay, these are not stupid people. Clearly, there's something we show and express to them that makes them go, hey, that makes sense to me. This is a good place for me to park some of my money. Let me put $80,000, $100,000, $60,000, whatever it is, into this asset and then leverage it for other things. So these are not idiotic people. So it's probably the number one question I get asked on social media. We get about 100 DMs a day. We track it. So we got 100 DMs a day. People follow our page. We reach 1 million people on social media a week. But we got a bunch of DMs just on my Instagram alone. I get like 100 DMs a day with asking different questions, things like that. Probably the number one thing I get asked about is how do I become my own bank? Here's what you need to know. First of all, You need to understand the insurance industry if you are going to buy insurance. You don't need to understand how to sell insurance, but you need to understand the industry in order when you're going to buy insurance or use this strategy becoming a bank. One thing you need to know is that what is actually one of the most important factors in using this strategy is who is setting it up for you. Probably more important than which company is used is who is setting it up for you, because that person is designing and structuring how your plan is going to look. Now, not everybody who has an insurance license knows how to set up these plans correctly. Sometimes, a lot of times, never done it before. And the reality is, most insurance agents, this is not a knock at anybody. I love insurance professionals. I think what insurance professionals do is highly needed and respected in the marketplace. It's a societal good that they're providing to society. The problem is most life insurance matters. That's right. So the problem is, the reality is most insurance agents in their career will never sell a policy where the client is putting in $5,000 a month. That's just not the reality. Most insurance agents are probably going to do $100 to $500 a month, and that's where most insurance agents are at. Which means their specialty is not necessarily in selling become your own bank policies to fund like this. So if that's what you're trying to do, the first thing you have to understand, if whoever you're working with, have they done these types of deals before? Have they done sales like this before? For those of you who are just joining the live stream, I was talking about becoming your own bank, the truths about becoming your own bank, what you need to know. And I was showing receipts. These are all active clients that are putting in anywhere from, some of them putting $5,000 a month. Some people are putting in $8,000 a month. Clients putting in $50,000 a year, $100,000 a year, all that. You want to see them again, I'll show you. That's not the point. The point is just that was a validation that, hey, we're actually doing this for people at a very high level. So, and that people with money and resources trust us to do that because it makes sense to them, because we articulate things in a way that, and we show them in a way that makes sense. They're like, okay, I want to park my money into this vehicle and leverage it and use it. So most of these clients are already using their policies for different things. So number one question, I guess, how do I become my own bank? The second thing is, which company should I use? The person setting it up for you is more important than which company you use. Why? Because the way it is structured and set up is very important. Now, if you are a buyer of these policies, you're thinking about buying one, you think about using one, understand you want to go with somebody who is doing these kinds of policies. If you are an insurance agent, here is some here's a tip, massive tip for you. If this is not your specialty, don't try to make this don't try to go learn on the client. Meaning, don't try to go experiment. If this is not your expertise, link up with people who this is their expertise. If you have somebody who's qualified, send us a message. We will help you close the deals, and we'll help you put these things into place. So a lot of times insurance people will reach out to me and they'll say, hey, I know you understand this type of strategy better. I don't specialize in the strategy. Can you help me with this particular client? So life insurance matters. Say, yeah, structure is most important, especially times go by. Yes, the structure of your policy is extremely important. Another question I get asked a lot is, people reach out to me and like, oh, I set up a whole life policy. How do I take a loan against it? And I'm like, why don't you ask your agent? They're like, oh, they don't know how that works. I'm like, okay. So they're the one who set it up for you. So if you have to go ask another financial person how you should handle something that somebody else set up for you, what does that tell you? That tells you, some gap in education was missing, or some expertise in the person helping you was missing. And so a lot of times they'll send me their stuff, we'll look at it, I'm like, okay, so it's not set up properly for what you thought you were trying to do. Your policy has to be set up properly and funded correctly. So if it's not set up properly and not funded correctly, it is not going to produce the end results you wanted to produce. And it has to be monitored over years, because these are plans that people have for years. The permanent life insurance is meant to be in place until the person dies. Well, if somebody's 30, 40, 50 years old, you're talking about many, many years, many decades of this plan being in place. So somebody has to continually service that over these years. So the truths about it are, one, you need to know who is setting it up for you. That is, in my opinion, way more important than the company that is being used. Now, the company that's being used is important because you want it to be a solid company, everything like that. But who is setting it up for you? What is their experience? How long exactly? Don't buy ones that can't answer your questions. I'll get to that in a second. Life Insurance Matters, talking about commission-driven agents. I'll talk about that in a second. So life insurance sales happen by commission. You make a sale, make a commission, just like real estate. I sell a house, I make a commission, right? That's how that industry works. Here's what you need to know. In real estate, when a person sells the house, the deal closes, the agent gets paid, that's the deal, deal's done. With life insurance, especially if you're paying monthly, and the person sets up a plan for you, and you plan to put in $1,000 a month. And you're going to do this, because this is my plan. I'm going to put in $1,000 a month, blah, blah, blah. You set up that plan and you agree to that. And then if for some reason, either you or they have some other customer and then the insurance agent gets paid a commission. Now, the insurance agent is generally paid their commission based on the fact that you're going to put this money in for 12 months. So the commission is based on that. So they get paid the commission based on you fulfilling that agreement. If for some reason you don't fulfill that agreement, like 3 months, you or maybe you got some other customer or something that set up a policy, and 3 months later, a person goes like, oh, I can't put $1,000 a month in anymore. There's something called a chargeback, meaning the commission that the insurance agent earned is now charged back to them. They owe that money back to the insurance company. So that means they now have a deficit with the insurance company. They owe money back to the insurance company because their client did not fulfill the agreement of paying this X amount of dollars for the year. Here's why that's important to you. If you are a consumer, and why you want to work with insurance people who are successful, especially who have clients who do big life insurance policies. Because if that agent has a chargeback, they now have what's called a negative balance with that insurance company, which means new commissions that they earn isn't even going into the agent's pocket. It's going to pay off the chargeback, the negative balance from some other client that they have who maybe they messed up their monthly payments, couldn't pay it anymore, everything. So they have a chargeback. Now, that agent most of the time was not expecting that chargeback. Happens, seems like, damn, I got a chargeback. So now that agent has pressure to make this sale. The agent is desperate now to make the sale. So now they need you to buy this life insurance policy. They're thinking about the damn chargeback. They're thinking about the money they needed to pay, their rent, their mortgage, their this, their that. And so now they need your sale. So as a result, you may or may not get the best plan design because you have no idea if your insurance agent has a big chargeback they're dealing with. I'm giving you guys the insight into like how to understand and look at this stuff. Another thing you need to know is the insurance agent to some degree can control their compensation, control the commission based on how they structure and design your policy. If they want to make more money on your sale, they can set up the policy in a way where they make more money, which means less cash in your policy for you. I'll say that again. The insurance agent can control their commission based on how they design and set up the policy. Some of it is because they don't know how to set it up properly. Some of it is because they need to squeeze as much money as they can out of your sale. So they will structure it in a way that where they can make more money on that sale, but you end up with less cash in the policy. There's ways they can control that. Now, some people, somebody was talking about like they're robots for the upline. Now, some agencies where they have something called an upline, or somebody's above them, might teach them what to do and might just tell them this is the way you got to do it. And so now they all go in and they're all kind of setting up the policies, and you don't know if your policy is set up correctly. So one of the things we do is we hack or we teach our clients. We show them, hey, this is how it looks when a policy is set up correctly. This is how it looks when the policy is not set up correctly. Can you see the difference? You see how this one you have more cash. You see how this one you have less cash. They go, oh, I see that. They see the difference. So they know that we set up the policies correctly. We also explain to them that whenever we're setting your policy up correctly to build cash, it actually reduces our compensation. It reduces our commission because we set it up that way so you can get the maximum benefit. Because if you get the maximum benefit, guess what you're going to do? You're going to use your policy better. You're going to refer us to more people that you know, et cetera, et cetera, et cetera. So we structure the policy in a way that makes it advantageous to the client. So it's extremely important that you understand the policy has to have specific features and benefits on there that is structured properly for cash building. So if you don't know if your policy is set up correctly for cash building, you need to verify, and they need to show it to you. Show it, because I can show somebody, and it's the majority of life insurance policies are not properly structured for cash building. I'm talking about permanent life insurance policies structured for cash building. The majority of them are not properly structured for cash building, which means the policy you have probably not structured for cash building. You're trying to become your own bank. So it's not something you're like, oh, which company should I use? No. It's actually specifically how it is structured. How is your policy structured? And then what it is, because the insurance agent is directing the insurance company, hey, this is the policy, these are the numbers, everything like that. The other thing is you should always see numbers. Always see numbers for your plan. Sometimes I'll tell people, somebody are like, oh, I set up a policy. I'm like, did you see numbers? They're like, no, I didn't see any numbers. They just told me I should put in $300 a month. Okay, so where's the numbers? So if you're going to use this strategy, you need to understand how it works. What's up, Lisa? Lisa's a trainer. Lisa's our trainer. I went to the gym this morning, Lisa. She knows because we communicate through an app and everything like that. So, hey, if you want to understand the truth about these strategies, these policies, you need to learn from people who are doing it. I showed examples. If you're just joining, these are all receipts. These are all. I just print out a bunch, like half a dozen policies. All of these are policies of clients putting in anywhere from $50,000 a year to $100,000 a year. Now, the point of that was to show you that, hey, if we're doing policies like these, clearly we probably know a thing or two about what we're talking about. So if you guys haven't seen the numbers, I'll show you that again. It's just like here, this client's putting in $50,000 a year. You can see that on there. This client's putting in $100,000 a year. So you can see most of that money is going to the cash bucket, by the way. We set it up so that the client benefits by the money going to the cash bucket, and they can leverage it. So we had a lot of clients put away a lot of money because these are financially okay. So look, if somebody can afford to put away $100,000 a year into anything, I think you can probably agree that this person's got some resources. Okay. I mean, okay, if you can afford to save $100,000 a year into a life insurance policy, you probably have some resources, which means you didn't get that money by being stupid. So these are not dumb people. These are people who are like, okay, I've worked hard. I've built this money. Now I want to leverage it for something. So one of the things we do is we teach this to our clients, not only how it needs to be set up properly, but actually how to use it, how to leverage it for assets. Everything from you want to do private real estate deals. We've got a turnkey real estate program that allows you to do affordable housing where it generates 10 to 12% cash flow. And it's an affordable housing space. It's secured by real estate. So we've got those things in place. One of the things we started doing is my goal is to transform the way that financial advice is dispensed to people. Meaning, it's never really, I've never thought it was very effective the way things are done in the financial industry. Number one, it's very hard for you to learn about your money and finances by meeting the advisor once a year, once every 2 years. But the advisor doesn't have time to be able to see everybody because they're constantly trying to find new clients. So it becomes very difficult to manage existing clients and new clients and all these different things. So one of the ways we worked on solving that was we do a lot of things, like we have newsletters and videos. A lot of our clients watch our social media channels. And then we have a learning platform. So I'm like, okay, so I put things together on a digital platform, film videos, and put that over there so people can continually learn. So that way, throughout the year, you continually learn. And then one of the things we did was I created a year-long program for some of our clients. And so I'm like, a lot of our clients are business owners. So one of the things I did was like, hey, let's create a year-long program where we can help them track their finances. One of the things we do is we have a customized app where we can look at 12 areas of your finances, literally track a dozen areas of your financial health to make sure we can improve every single area. And so I guarantee you have never tracked a dozen area of your finances before. And it's not even super complicated. It's something that's all automated that we monitor how well everything's doing, and we give them advice on how to improve specific areas: cash flow, debt management, reserves, proper protection, build wealth, build legacy, all these different things. We show them all of that in that program. And then we have a whole networking component to it, meaning we have clients who sometimes they're trying to raise capital. They got private real estate deals they're wanting to get into. So over the years, we've got a whole network of people that we've gotten to know. So we connect them with our network. That by itself is a tremendous benefit. So sometimes you might need a very specific real estate person for a very specific area. You might need a real estate attorney in a particular state. All these different things are things we connect people. And so that's just kind of one of my skills, is being able to connect people to things that they need or what they're looking for. So we've got a whole network component to it. And a lot of times, if you're in business, a lot of business owners, they're kind of doing a lot of things on their own. They don't have a group where they can go into and kind of discuss what problems, issues they're having, different things that's happening in their world, knowing who to hire, when to fire somebody, looking at their business, all that. They don't really have a place that they can go. So we provide that inside of this group for that. And then we show them all the details on how to become your own bank, how to leverage it for real estate, types of real estate you can do. If they're interested in self-storage, if they're interested in multifamily, they're interested in affordable housing, all these different things, we help them actually use. One of the things they can do is use their policies for all stuff like that. So all of these are things we help them to do. And so if you want to know about things like that, if you want to be in a group of highly successful people, imagine if you're in a group of people who can save $100,000 a year. Imagine if you're in a group of people like that. Well, that's our client base. So if you're like trying to get to the next level and you want to be around people like that, very successful people who are building things, growing and expanding, driven, all that kind of stuff, send me a DM and I'll let you know the details about our program that we have. And most of my attention, my personal, because I spent a lot of time, continuing my education, learning lots of different things. Most of my attention will now be spent within that group. And that's because that's the best way for people to actually learn about their money and financial things. Everybody wants to learn, become financially literate. Videos will only take you so far. Videos you watch on YouTube, on Instagram, it will only take you so far, because no video can implement anything for you. Like one of the things we do for our clients is tax planning. So if you don't know what tax planning is because most people aren't doing it. Like, wealthy people strategize to reduce their taxes. Strategize. And if they're super wealthy, they literally influence the tax code. They lobby for it. They get their industry to lobby for it. Okay. So wealthy people influence the tax code. But the tax code is actually there for your benefit. Anybody can tap into the tax code. The problem is 70,000 plus pages of tax codes, rules, regulations, example, all these different things, over 70,000 pages. So how do you know which tax deductions, which tax credits, which different things you qualify for? So most people don't know what they actually qualify for. And so when they go to file their taxes, it's often too late for them to maximize the deductions because they never planned it in advance. So what rich people start looking at, they're like, hey, We're looking at, I'm looking at big tax bills. So I need, in the future years, I need I need some change in the tax code to lobby for it. Or they're like, we need to start planning so that next year we're reducing our taxes. This year we're reducing our taxes. Or last year, did I overpay my taxes last year? Were there deductions I qualified for that I didn't take? Were there things I could have done that I didn't do? Sometimes you can actually amend your taxes and get money back. So you can do all these different things, but you wouldn't be able to do or know them if you didn't do tax planning to look at your overall financial position. So that's one of the things we help our clients do. So much of our services are going towards that group because it's like it's the best way to learn something and actually implement it. You got to go from financial planning to financial doing. You can't just be planning forever. You got to actually then do something. Same thing with your policies, life insurance policies. It's not just about you just putting money in a policy. You got to like use it for something. So if you're going to become your own bank, it's about you then becoming a lender. How do you become a lender? Most people, their experience with banking goes like this. They know how to be a depositor because when you first get your paycheck and all that is deposited into your bank account. In fact, it makes you sign up. Hey, sign up for direct deposit. Okay, so because it's easy, it gets deposited in your bank account. A few people know how to be a borrower from the bank because they go on and borrow money on credit cards, they borrow for a mortgage, they borrow to buy a car, etc., etc., etc. So you understand how to be a borrower. Fewer people know how to become a lender. How do I then leverage my credit? How do I leverage the capital I have? How do I leverage these things to become a lender? Whether it's a hard money lender, different aspects of collateral lending, all these different things. How can you become a lender? Because the lender earns interest on the capital that they have or the credit they've been able to leverage to then lend out to somebody else. So you see, you got to be able to understand, how do you actually do these things? You're not going to understand how to actually implement it just by watching YouTube videos. It may kind of give you some insight, but most of these things somebody has to help you put into place. Like, for example, if you're like, I want to become my own bank, I want to store money in a life insurance policy, et cetera, et cetera, et cetera. You then somebody has to help you implement the policy, actually apply for it, put it into place, structure it correctly. If you're trying to do tax planning, it's not enough to watch a bunch of videos on tax planning. Somebody has to like take your 1040 and all your supporting schedules and everything like that and input it into tax planning tools that allow them to look at different strategies. We have one of the tools we use. You utilize artificial intelligence. It's been trained on the tax code and supporting court cases on the tax code. So all of that is you then have to have tools. That's one of the ways you get to from where you are to where you want to go. You got to have tools. You got to have a strategy. What is my strategy? What am I going to be doing to get to where I want to go? And you got to have a team. Well, who's the people on your team that helps you to get from where you are to where you're trying to go? And that's what I mean by so many times people spend time consuming content without ever doing anything. So all you do is you spend time consuming content. You hear about somebody talking about setting up a holding company that owns multiple LLCs, and it sounds cool, but then you don't actually know how to implement it, so you never implement it. It's not about learning this stuff just to learn it. You got to learn it to implement it. It comes from the implementation. You can hear all about becoming your own bank. You could say, I want to be a lender. I want my money to make money for me. All these cute phrases that people say, but have you implemented any of it? Another mistake people make, not even just becoming your own bank, just another mistake people make is you set up a trust, right? You finally get to the process of setting up a trust. And by the way, a trust isn't free. If you get a free trust, it's not going to be really any good, okay? So a lot of people are like, I want to set up a trust. A trust is not free. It's a legal structure, and you pay for that legal structure to have it in place. But then you also need to do a further step is you got to open a bank account for your trust. You got to go to the bank, and then you got to have an EIN number, all that, and you open a bank account for your trust. Because if you have a trust, and then the trust is your beneficiary on your policy, but there's no bank account, where are you going to deposit a check from a life insurance policy? You set up an LLC. Where's the bank account for the LLC? Okay, you set up and you're like, oh, I need to set up an LLC to save taxes. An LLC does not save taxes by itself. All it does is the primary purpose is to provide liability. It's a limited liability corporation, so it limits your liability to separate yourself from your business assets. However, there's ways to reduce taxes if you file as an S corp. If you have income, you can save on self-involvement taxes, etc. So understand, it comes down to what you can implement, not what you can talk about, not what you think is cool, but what do you actually have in place? That's the key. What have you implemented? What are you implementing? What are you freaking doing? So and I get this all the time. Like, people watch so much shit. You fall asleep watching it. My whole purpose behind doing these videos is to get you to a point where you move from like watching to actually doing, from like thinking about it to executing and doing. And it's a way we find people who are like ready to do stuff, right? So it's an outflow activity. And it also allows you to get the perspective that, hey, maybe we know a thing or two about what we're talking about. I think if you listen for a few minutes, you can probably pick up on that. I don't need to like say I'm an expert at all of that. You can tell if I am or not. You can use your own discernment on that. So understand, it comes down to what can you implement? What can you put into place? What have you implemented? If you have a will, a trust, all these different things, make sure to set up a bank account for them. Make sure to set up any LLC you have a different bank account for your LLC. Have a different bank account for your LLC. Every time we go and set up a new LLC, we go to the bank, we get EIN number, go to the bank, set up an LLC. Every single time the bank extends my new LLC some line of credit, they're like, okay, we're going to extend this line of credit to your LLC. Why? Why do they do that? Because I have previous banking relationships with them. So they're like, okay, so you set this up here. Okay, we're going to extend this line of credit. You can apply for this thing, this thing. So immediately I set up an LLC, go to the bank, open a bank account, and the bank extends me credit. So now now I can continue to build my business credit from there. So it's important for you to have relationships with your banks, relationships with the insurance companies that you use, all these different things. Relationships matter when it comes to money. Relationships matter when it comes to money. Our whole goal is to move from the industry itself being transactional to relational, where somebody just sells you something and then that's the end of it, to where you have an ongoing relationship with that person. Like most people don't have a relationship with their banker or their bankers. They don't have a relationship there. You barely go into the bank. They don't know you. So whenever we're going to open these accounts, we go into the bank. My wife Chelsea and I would go into the bank. We've got a personal banker there. He knows our stuff. Okay, so we go in there and we're like, okay, here, your stock. So then we go and establish we have different banks that we use and different bankers of those different banks. And so the idea is the different bankers should get to know us, and then we have lending partners. All these different things are relationships, guys. These are important. Beware of them wills. What's up, Dietrich? How you doing? Beware of them wills. Yeah, it's wills. I'm going to send out an email about what happens when you die in America without a will. Dude, it's insane. Insanity. Definition of insanity. The stuff you have to go through if you die in America without a will, it is insane. Without a little stupid piece of paper. It's crazy. The state got to try to decide your stuff. A bunch of people can come out, contest your affairs, all these different things. It takes forever. Then you got to pay the court to decide your freaking affairs. It's wild. And so you want to have a will, trust, power of attorney, advance directive for healthcare, all these different things, especially if you have minor children, if you own property, if you have a business. If you have a business with partners, you want to have key people life insurance. You want to have something called a buy-sell agreement, where if somebody dies, the business can be bought out by the other person. And how are they going to get the money to buy your share out? If you die or if they die, life insurance can produce the money. Boom. Now you got the capital to buy the other person's share out. Because most people aren't trying to inherit the business. One of the things we're moving into is acquisitions, where we're acquiring different businesses. And then we've got a consulting division for our company where we consult about how to improve the conditions of that business. So we can take over a business and then go and have our consultants go in there, and then we go and improve the conditions of the business, improve the cash flow of the business. It's no different than if I buy a property and I fix the property up, and I fix the property up, and then I increase the rents to market rates, and people are willing to pay higher to live there because there's more amenities, there's more stuff. There's no difference than if I go and take over a business that already has cash flow, and I improve the cash flow of that business, and now I put it into a better operating state, put it into a better condition. So that's our whole goal is acquiring businesses and then increasing the viability of those businesses through administrative technology, administrative tech that we apply to that business to help the business grow. Buy-sell agreements not being used. It's very important. So if you don't know what a buy-sell agreement is, it's like I've got a partner, me and somebody else start a business. We're partners in this business. If my partner dies, because I'm not going to die, my partner's going to be the one that dies. I'm just kidding. Whichever one of us die. Okay, so let's say my partner dies. His share of the business is now got to be owned by someone. It could go to his spouse. It could go to his kids. Well, what if his kids have no interest in running the business? So now I got to deal with a partner who has no interest in running the business, doesn't know anything about the business. So I would prefer to just own the business myself, right? That would be ideal. So how do I handle that? Well, what if my partner doesn't have enough capital to buy? What if the family doesn't have enough capital to buy my share? All right. Let's say we got a $2 million business and we own it 50-50. And so he dies. The share of that is worth $1 million. Or I die and now that's worth $1 million. How is he going to be able to buy me out if he doesn't have $1 million liquid to buy me out of my business? Well, we have something called a buy-sell agreement, where it agrees that if one party dies, the family will then sell their share to the other party. Sometimes it's a pre-agreed upon price. Sometimes the business is valued at the time of death and then decides that, and all go from there. But then how are they going to have that capital? Well, we can have life insurance on each other. So if any one of us passes away, some money goes into the business, and then some money goes towards the surviving family, and the surviving family now has the capital to then execute that buy-sell agreement and buy the deceased person's share out of the business. So the deceased person's family received this lump sum of money. The surviving partner gets to own the business, and so it gets sold, right? Because they're not going to be there anymore. So it's called a buy-sell agreement. If you have partners in business, you want to look at having that. And some people will have a buy-sell agreement, but it's not funded. Meaning, my partner agrees to buy my share of the business, but they don't have the money to do so. So now you got to make sure there's money to be able to do it. So that's where life insurance comes into play. So, hey, if you guys have any questions on all these things, to recap, I talked about life insurance, using life insurance to become your own bank. It needs to be properly structured, but that's just step one, guys. That's not that. If you just have a life insurance policy, if you're not using it, then it's just a life insurance policy with cash in it, right? You're not actually using it to become your own bank. You then have to then use it. So you either use it to become a lender, use it to put capital to businesses, use it to lend to people who are trying to flip properties, use it to bridge, your bridge expansion, all these different things. You can then use it. But most people don't actually know how to use it or what to use it for. Or when they're ready to use it, they don't know which asset to put it in. So those are some of the things we teach our clients how to do. We have a program around all of that. Organizing your finances, you can see everything in one place. We look at 12 areas, we monitor 12 areas of your financial life so that you can actually be in the best financial condition possible. We then help you get accredited as an investor so that you can invest in private real estate deals that's not available to the public. So we constantly source deals, which means we find different deals that's happening, different types of real estate asset class, all of that for our clients. And so our clients who are accredited investors get access to those deals. And so, we help our clients become accredited. All these different things we help them to do. So if you want to know about those kinds of things and how that works, and you kind of want to work with people who can put you up into like not savvy things, but smart things that can generate a great deal for you and help you organize your finances and actually execute on things, send me a DM. We'll be happy to share with you some of the different things we got going on and what we're working on. So with that, I wish you a good rest of your day.